Hey guys, how are you doing? Alonzo here. I just want to show you how I use the Bollinger Bands for my stock analysis and also give you a little more than what you may have seen in other videos, as I think, the Bollinger Band is not used to its full extent, right? So here on Thinkorswim, right, I'm going to show you how you actually add the Bollinger Bands, right? You go here on the top in the little beaker, you're going to click on it, edit studies, you're going to add, you're going to search for Bollinger Bands as the very first one, hit add selected. You actually want it on the price, that's correct. Apply, hit OK. And you see how it has three different colors here? What I'm going to do is the following, right? So I'm going to go into the little gear icon here on the right, and I'm going to change the lower band to red. I guess that's red. And the upper band to red as well. The midline you could leave in blue. That's fine. Hit OK, apply, OK. All right, so the middle band to me is not really that important, right? I really focus on the top and the bottom. You could make a case that, oh, it's a moving average. It shows direction. But in my experience, it hasn't been that consistent. So I also go ahead and remove that, right? Because as you'll see on other videos, you can go ahead and add the moving average directly. So you don't necessarily need a middle one, right? So I'm just gonna unclick these here, hit apply, hit OK. And now I only have the red top and bottom lower bands. So two key things, right? Two very important ways to use Bollinger Bands is one, you could use it as support and resistance, right? So here you see for Facebook, whenever it hits the bottom of the Bollinger Band, it comes up. When it hits the bottom, it comes up. When it hits the bottom, it comes up. So I'm not saying that it's guaranteed that every time it hits the bottom, it's going to go up. But once it hits the bottom, which represents, and if you like the background behind it, two standard deviations from the average price. Once it hits the bottom, it is very unlikely that it'll keep going down. Can it keep going down? Of course, but it's just unlikely. So the way I use it is as resistance, right? Facebook is a stock that I personally like and that I want to keep dollar averaging into. So when it hits the bottom, I see that as a buying opportunity. So when it hit 312 back in early November, I purchased it. When it happened again in around Thanksgiving, I did it again. And now it hit 320, it's the bottom, I bought it again. So just keep adding on a stock that you like. A strong stock, I would recommend the strong stock. I can talk about that in a different video, whether it's Facebook, Apple, Nvidia, right? The stocks that you want to build your portfolio with. When you see it hit the bottom of the Bollinger Band, it's time to go long. What do I mean by going long? You either purchase stock or you purchase a long option strategy, right? Whether it's selling puts, selling put credit spreads, and we can talk about that in a different video if you guys like. If you guys like this content, just please hit that thumbs up, and if you have any questions, I'll be happy to answer them. So again, at the bottom of the Bollinger Band, if it's a stock that you like, think of it as a buying opportunity, an opportunity to go long. The same with the top. Once you hit the top, think of that as resistance, right? Can it break through and create a new support by breaking resistance? Yes, but it's unlikely. So when it hits the top here on the Bollinger Band, I don't necessarily close my position, but I see it as an opportunity to take profits. So that's one key way in which I use Bollinger Bands. The other, think of Bollinger Bands as bands that contract and expand, contract and expand, contract and expand. So what happens when it contracts? It's very likely that there will be a big move to follow, right? If you see here, it contracted and then it burst up. Here again, burst it up. Here again, it squeezed, right? They call it the Bollinger squeeze. It squeezed and it came up. It squeezed and it came up. So when it squeezes, it may not necessarily come up, but think of it as an indicator or warning or flag, right? That there's going to be a big move. If it's contracting, it's either going to go up or go down. So expect a large move in either direction. It won't necessarily tell you which direction it's going in, but it'll at least tell you that a move is coming. And it's very, very useful in that regard. And the last tip that a lot of people don't talk about, especially in some of the shorter time frames, right? It's when the Bollinger Bands are both heading in a certain direction, you can think of that as a trend. For example, here, right? It's going up, it's going up. So the trend is going up. And then when it starts to change, the trend is going down. You can see for a while, it's been pretty flat and we've been kind of consolidating between 310 and 350. But you could see here when it started to point down, the trend was pointing down. On a daily, that may not mean much, but if you look at it in a weekly perspective, right? Here, when it's pointing up, it's very clear that the trend is going in the same direction and it doesn't change for a while. So this would be a good opportunity to just ride, right? For example, if you get in around 290 or 300, you could have easily seen that the trend is going up and just stayed in until you started to see this consolidation. Even if you lost here, right, when you see an engulfing candle, would have been an opportunity to get profits and you would have made a significant amount. So something to think about, right? So I hope this helps. Think of the Bollinger Band as an opportunity to come in, when it hits the bottom, get out or take profits when it hits the top, and also to analyze trend. Thanks again, and I'll see you in the next video.